Now, back to Facebook. The stock has now lost $25 billion in value since its public debut, and questions about a tech bubble have returned. On the social network's first day of trading, we put the question to George Zachary of Charles River Ventures. Here's what he had to say.
Well, I think we're in a bubble that's building. People think of bubbles as binary. They're not. It's a phase. It's a process. The end of a bubble is always when buyers of stock are borrowing money, debt, on basically margin to buy equity. We're not even close to that.
Joining us again is George Zachary of Charles River Ventures. He is also an early investor in Twitter. And George, do you still think the same? We're in a bubble that's building, or has the bubble burst now that you've seen the last few days of Facebook?
I don't think we're in I think there's a correction. I don't think we've had a bubble that's burst. All bubbles usually terminate with consumers, citizens basically using debt margin to buy equities. And we haven't gotten to that point. What you're seeing is that there's a bit of frothiness in the private markets, on the secondary markets, that value the company more highly than what the public market is.
Way more highly.
Yes. I
mean, what's your sort of reaction to the difference in the valuation on the private market versus the public market today? And, it dropped again today. There's no sign of where the bottom is.
There's never a sign of the bottom until you're there. I'm not surprised. The entire public market is definitely soft. There's renewed worries about macro issues. I think Facebook's a company that's here to stay. With 900 million users, there's never been a company like this in terms of its impact. I'm very confident it's going to be a great company. The question is what price you want to get into the stock at. I don't have a good idea. Personally, I would be a buyer between $15 to $25 a share. So I think there's still some correction because I'd like to see basically 200% a year growth in revenues.
Right. So at the bottom end, that's far less than half of what it went out at.
I think so. But that's still, a $50 billion company.
Does this impact your view on the outlook for social networking at all? I mean, we talk to venture capitalists all the time who say, look, what happens in the public markets doesn't impact what we do and doesn't impact startup. But this is a pretty extreme, dramatic fall.
Yes, it is. It's an extreme fall for a public company, but it's not a dramatic fall if you're a venture capitalist. When I'm a venture capitalist, I'm investing in companies at a $10 million to $50 million to maybe $100 million entry point. So for me, the exit point's $50 billion or $10 billion or $100 billion, I'm super happy either way. So I view it as upside, which might be different than people who basically trade stocks do.
Now, one of the big concerns about Facebook is monetization of mobile, which is currently at zero. You are an investor in Twitter. What can you tell us about how well Twitter is monetizing mobile?
I can only tell you a little bit. And what I can tell you is that the mobile monetization is ahead of plan. Their mobile client app is monetizing very well. And I think sooner or later when Twitter announces how well they're monetizing, people will be very surprised. I see Twitter becoming a billion-dollar revenue company sooner than people think.
Are you surprised that Facebook then hasn't been able to do it?
I'm not surprised because Twitter actually started out as a mobile company through SMS. Facebook has always primarily been a web company that now is reacting to mobile. So the DNA is a little bit different in that sense. I think Facebook will be able to solve this issue.
Another thing that was reported today, Facebook executives, a couple of them leaving for Pinterest. Is Facebook going to have a harder time holding on to talent now that it's public, it's not the darling of the venture capital world?
It doesn't make a difference whether it's the darling of the venture capital world. It matters whether it's the darling of the public market world. And usually when stock price starts to level off and drop on a sustained basis, not a week or two, but I mean a 3-month to 12-month basis, usually the best people at companies start thinking, maybe I should do something different.
So you think it will be harder for them to hold on?
I think it'll be harder for sure.
Is Pinterest officially the next big thing?
I think it's a great thing. I wish we were an investor.
What makes you so positive about the future of Pinterest? And could it become a competitor to Facebook at some point?
In terms of becoming a competitor, potentially, I don't see it clearly. I think the thing that's very clear to me and other private investors is that the level of engagement of a user on Pinterest is extraordinarily high. And that level of engagement usually has a strong correlation with exit value and valuation sooner or later.
There's been talk of Facebook buying Pinterest.
I think it would be a great thing for Facebook.
So what should we be watching for? When you see a lot of these hot companies, sometimes they stumble. What should we be watching for with Pinterest for signs of whether it's going to stumble or it's going to be the company of the next decade, essentially.
Stumbling is a part of all of our lives. It's crawl, walk, run for us as people. And it's the same thing is true for companies. I saw it with Twitter early on. We had a lot of internal problems around technology and systems, and that was solved. So bold people with big visions can solve things.
Okay, George Zachary of Charles River Ventures, thanks so much. Always appreciate having you here on the show.